Welcome to Talk Tickers, where we break down the earnings calls that move markets. Today, we are diving deep into Western Alliance's third quarter results.
So Western Alliance delivered a really strong quarter, and the stock definitely popped on the news. But there's this one little thing, a pretty significant credit provision, that has investors scratching their heads. So what's the real story here? Let's get into it.
All right, first up, let's take a look at the headline numbers. These are the figures that really got the market excited.
So, the big number, $2.28. That's the GAAP EPS Western Alliance put on the board. Now, the street was looking for something around $2.08. So yeah, they didn't just beat, they blew right past it. A solid 20-cent beat. And it wasn't just earnings, it was a total clean sweep. Look at the revenue line, over $938 million. The consensus was way down at about $887 million. That's a huge $51 million beat. So when you get a beat on both the top and bottom line like that, it's really no surprise the stock finished the day up over 3%. Okay, so a big beat is great, but why did it happen? What was really driving this performance? Well, when you dig in, a few key things really jump out. First off, their core earnings power was just exceptional. They hit a record $394 million in what's called pre-provision net revenue, or PPNR for short. Now think of PPNR as the bank's raw operational profit before they have to account for any potential bad loans. It's a really clean look at the underlying health of the business, and frankly, that number is a monster.
So how did they get to that record PPNR? Well, it was kind of the perfect storm. For starters, a massive influx of deposits. We're talking $6.1 billion in a single quarter. That's a ton of cheap funding. Then they managed to keep their net interest margin stable at 3.53%, which, trust me, is no small feat in this interest rate environment. You also had their mortgage business, AmeriHome, bounce back in a big way. And to top it all off, they got more efficient, just firing on all cylinders.
Okay, so everything sounds amazing, right? Record profits, deposits flooding in, but there's always a but, isn't there? Despite all this great news, the market is laser-focused on one thing, this $80 million provision they had to take for a specific credit issue.
You know, to their credit, management didn't shy away from this on the earnings call. CEO Ken Vechione got right out in front of it. He called it incredibly frustrating, but was really firm in framing this as a one-off issue. The loan in question is tied to a Cantor Group V, and he was pretty clear that they believe there's an allegation of fraud here. Basically that the collateral wasn't what it was supposed to be.
And this is really the heart of the debate right now. You've got this tug of war. On one side, you have management laying out their case. Look, it's an isolated problem. We think it's fraud. We have other collateral. We have personal guarantees. We even have insurance. But on the other side, you have the market, which is just really jumpy about regional banks. After everything that's happened this year, any headline about credit quality gets put under a microscope.
All right, so with that credit issue as the backdrop, let's look at how management is guiding for the future. What's their game plan from here?
You know, their guidance really screams confidence. They're sticking to their $5 billion loan growth target, which is solid. But here's the kicker. They actually raised their full-year deposit growth target to $8.5 billion. After a quarter like they just had, that's a big statement. On top of that, they're still on track for solid growth in net interest income and expect charge-offs to stay pretty low. They are not acting scared at all.
Talk is cheap, right? But this is putting your money where your mouth is. They announced a new $300 million share buyback, and they didn't wait around. They've already bought back $25 million worth of stock. Think about that. While everyone's worried about this credit issue, they're out there buying their own shares. That's a huge vote of confidence.
Okay, so let's pull this all together. We have blowout results on one hand, this nagging credit concern on the other, and a really confident outlook from management. Which brings us to our take.
The big question for every investor is, so what do you do? Where does the stock go from here?
All right, here at Talk Tickers, we're putting an outperform rating on Western Alliance, and the thesis is pretty straightforward. We believe the sheer power of their core earnings, that record PPNR, and their amazing success in bringing in deposits will ultimately win out over the noise from this one credit issue. The key thing to watch, the catalyst, is whether they can successfully convince the market that the Cantor loan is truly a one-off, and of course, keep that underlying performance humming. And of course, just a quick reminder for everyone, this is not financial advice.